What's up, guys? It is Ryan, and today I wanted to talk real quickly about the difference between higher rates and lower rates and what that actually means for your closing costs, okay? When you're looking at a rate, guys, let's just say conceptually 5% is the rate. I'm just using a number, okay? Let's just say today par rate is 5%. What does par mean? It means you're not getting any kind of credit on your closing costs, and you're also not paying anything for your closing costs. When you hear people say buying down the rate, that is when people are actually paying for a lower rate, which increases your closing costs, okay? I'll put CC here, closing costs, okay? If, for example, let's say you have funds and you have extra funds at the end of settlement and you know that you can buy down the rate and you really want to have a lower interest rate, you can do what's called a buy down of the rate, where let's just say instead of 5%, you take a 4.5% rate. What does that do for your closing costs? It's going to increase it, okay? On this seesaw, if you go with a lower rate, you're going to increase your closing costs. Let's just conceptually say, and this is not real, this is always changing and you never know what it is. Let's just conceptually say it costs you $3,500 in additional closing costs because you want to have a lower rate. On the contrary, or flip side, let's say that you're a little short for closing costs and you want to actually reduce the amount of money you have to pay for closing. You can take what's called a higher rate. The higher rate is going to lower your closing costs. And let's just say, again, conceptually, you're taking a half point higher. Let's just say you're going to get a credit of $3,500. That will actually lower your closing costs. Many people will do that, especially if they're first-time home buyers, because they may not have all the funds needed for closing, or they don't want to have no funds left once they buy their house, okay? This is also, for many people who are looking at first-time home buyer programs, this is what a lot of banks are doing. They are promising you, we're going to give you 10% up to $6,000 or 6% up to $10,000, whatever it is. And what all they're doing is they're taking your par rate and they're jacking it up and giving you money back here. That's not to say all first-time buyer programs are doing that, but a lot of the ones that we see, people go to local banks or big banks and they come to us and they say, hey, this is what they're offering. Then we look at the fine print or we look at the actual fee sheets and we see, yeah, they're giving you X amount of money back, but they're jacking your interest rate up by a full point to a point and a half. So don't be tricked by that, guys. If you have questions on this, use this as a resource of information. Okay, that is why we are here. We are here to help you. We are here to educate you, and we're here to help make sure you get the best deal. That's why we work with 12 different lenders. Okay, we don't have just one shop. We actually have 12 lenders so that we can work for you. All right, if you have any questions on this, put it below. If you liked it, please share it. We appreciate the love, and let us know what else you have questions on so that we can do a video on that topic just for you. All right, you guys have an awesome day. We'll catch up with you later.